let's think about, let me just get my little notes. So more some thoughts about the market. I was sparked by this cover, and it got me really thinking about the markets this week. And again, looking at the cover of The Economist, I'm left with this thought. In a world where buying bankrupt stocks is seeing some novice traders make an absolute fortune overnight from buying things like Hertz, up a gajillion% from its lows. Some people are making great trades. And I've got to admit, I speak to quite a few seasoned veterans, and myself is included in this category. Some of us are very baffled about the state of Wall Street, the state of the economy. I've spoken at length about this multiple times, so it's more of a mention. I promise you I'm not going to harper on about it. I'm just mentioning it for context. But all the seasoned veterans, we're pretty fucking baffled by what's going on. And I think it just highlights the fact that, manipulation, even at this level, it can happen. And when I start seeing headlines like this, the government knows no spending. The central banks and the governments currently have zero restrictions on spending, but yet they've also got zero for their investment strategy. So cash is being printed to bail out corporate America, essentially. They're getting bailed out time and time again, and they're leaving literally like real people, real Americans, real people, wherever you're in the world, real, insert your country, poised like Atlas, bracing the economy, the weight on its shoulders. And when you look out the window, there's such a divide between Wall Street and Main Street. And we've got 18 consecutive weeks. Let me just pause for dramatic effect. 18 consecutive weeks of greater than 1 million new unemployed claims. And that isn't impacting the economy. It's not impacting anything, including reality. But as long as the stock market goes up, no one seems to care. No one gives one hoot about what's going on, because this time it's different. This time I found an awesome a couple of awesome graphics to help illustrate this. But we found, it is a very different situation right now, because it is a different situation. And the central banks seem to think that pouring more gasoline on the fire is the right thing to do, because while printing more money has and is and probably will be used consistently through history and in the future, at the rate at which money is being printed, it's unprecedented. It really is. But hey, this time it's different. So, no big deal, hey? No big deal. But the question that I'm left with is, where does this leave swing traders? Because I'm a swing trader, whether you're a one-day swing trader, a day trader, you're a swing trader, or it's multiple days, multiple weeks, multiple months. There's lots of variations of swing traders. But where does this leave you and me, the swing trader, in a very manipulated market? Because let's face it, these markets are very manipulated. And if you didn't think that previously, you've got to think it now, because, hey, look at the stock market. The markets only go up. But as a swing trader, I need broad sweeping swings for more than a day or two. And those swings have to be in both directions. You've got to go back and forth. Otherwise, you're not swinging. You're just booming or busting. You're doing one or the other. So for a swing trader, we need both directions. And under normal circumstances, and what I mean by normal is less manipulated conditions, we would typically see this. Under normal circumstances, there's going to be less weird conditions. And a larger sized portfolio model will and should benefit no matter what happens. And that's what I'm seeing is different right now. Now, the way that I've tried to describe this is the best way of thinking about swing trading, and my preferred style of swing trading, is it's comparable to a farmer planting crops. You're going to cast the seeds and you're going to see what the crop yields. Sometimes the crop yields 100%. Sometimes the crop yields 40%, 60%, 80%. Sometimes you're going to have a drought. Sometimes you're going to have a plague. You're going to have a plague of locusts or whatever, but ultimately, when you're planting crops, and again, this is my preferred style, I will plant lots of seeds. I am a very active, a very aggressive swing trader. I don't think of myself in those terms because it's normal for me. But from the outside looking in, that is what I'm looking to trade at least one thing every day, or at least on average. So I do compare what I do to farming. We're planting crops, casting seeds, and seeing what the crop yields. Now, let's compare this to the other style of swing trading. And I've tried to compare this to fishing unsuccessfully, or you could call it hunting. But comparing it to angling or pleasure fishing, where an angler may sit and wait a little more, and then get a nibble and then strike. And sometimes the fish are biting and sometimes the fish aren't. But it's this farming versus fishing that I want to explore in a little bit more detail right now. And just to give you some food for thought so that you can try and figure out where you are on the spectrum. And then I'll also give you my thoughts about where I am and my own evolution, given the current situation at the moment. So farming, casting lots of seeds, seeing what grows. Fishing, essentially, you're catching one fish at a time. It could be a big fish. It could be a small fish. It could be that, hey, nothing bites today. And that is two extremes of swing trading. So let's go through some of the differences so that you can try and figure out where you are on the spectrum and what might be suitable for your situation, or maybe even just the current situation, which are thoughts that I've been certainly pondering quite a lot at the moment. So farming, as I've already started to touch on, farming for me is a big portfolio. And my portfolio is not that big. I'm reminded of I can't remember the guy's name, actually. I'm just trying to quickly reference it. Anyway, some portfolios will look at, or some larger portfolios at an institutional level will look at 200, 300, 400 positions as their normal. Now, as a retail trader, I'd put myself into the category of large portfolio. I'm very happy with 30 or more positions. Certainly during the big drop, I would be trading 30, 40, 50 times every 2 or 3 days. I was very active. The market dictated it. But under normal circumstances, if we're swinging back and forth, I might have 10 or 15 bullish positions or 10 or 15 bearish positions. There's usually a mix of both in my portfolio. That is my preferred style of trading. Now, the benefits of farming in this context are you're going to benefit from the law of large numbers. You're going to start benefiting from the law of averages. When you start having a large quantity of data, you can start to normalize. You can start to see what averages are. You can start to see the benefits of all of these strategy principles. And this is one of the things that I do focus on and do teach on, is whatever your style of trading is you've got to trade with the frequency that your style or your preferred trading style sets up. If your strategy sets up once a day, you put one trade on a day. If it sets up once a month, then you just trade once a month. And that's the difference between farming and fishing that I was trying to describe earlier. For me, farming, I have my dial turned all the way over so that I've got the maximum number of opportunities presented to me every day. We'll talk about that a little bit more in a moment, but that's essentially farming. You benefit from these law of large numbers, the average profit, the average gain. You've got a nice smooth equity curve. And the catch is under normal circumstances, but we're not in normal circumstances. Now, statistically, you've got this smoother equity curve over a longer period of time. Since 2016, with this current strategy that we're using right now and sending alerts out every day, I've done nearly 1,500 trades. Just think about that, 1,500 trades in the last 5 years. That's a lot. But what it allows me to do is I have a lot of data. I know what my averages are. And when you start getting into the thousands of data points, and I've got quite literally hundreds of thousands of trades over the years, I've been even more active than I am now. But right now, with this version of the strategy in the last 5 years, which is when I've been posting the real-time alerts out, I've got, again, we're into what would be qualified as statistically significant numbers. And what you should be seeing is a nice smooth equity curve over a long period of time. And again, this is one of the benefits of farming. You get this normally smooth equity curve. Again, farming, where it doesn't work is when we have a one-sided market. Again, pre-crash, there was still two-sided markets going on. You had magnitudes of movements in one direction, but there was still upswings and downswings. I actually made some good money initially on the bullish side on those retracements for 2, 3, 4, 5 days. So farming, it doesn't work well when the market's one-sided. So what do I mean by one-sided? It's where a market is only going in one direction. It's exponential. It's moving up. There's no downswings. There's no upswings. It's only doing one thing. But in that crash, it was still two-sided. And the big portfolio was actually doing really well. Now, where it doesn't work well is during this Rona rally. So this is, again, just some of the things that I'm thinking about. So some of the things that we have to be aware of with this style of trading, because not every strategy works all of the time. That's what we need to keep in mind. So this is a situation, what we're going through right now in the last maybe 2 months, is this is a time where this style of trading doesn't work great. And it's because it's one-sided. We're not seeing the upswing for a few days, the downswing for a few days, the upswing. We're not seeing multi-day, multi-week swings in both directions. And that's where this style of trading doesn't work. So does that make sense? Does that ring true for a moment? Just while I kind of get I've got actually 2 more. Farming, it can be time consuming to manage effectively when the crop doesn't have a high yield. Like right now, it's very, not time intensive, but it is a little bit, there's a lot more management involved when the portfolio, when the positions aren't working out. There's a lot to consider. There's a lot more hands-on when the crop isn't working. Again, if you stick with the farming analogy, you might be looking at pesticides, you might be looking at soil quantity, you might be looking at all those things to make sure that the crop is going to do as good as it can. And you only have to do that when the crop is failing. And that's the drawdown with farming. Now, when it does work, it's an exceptionally low maintenance, high yield strategy when you've got two sides to a market. It's swinging up and swinging down. So that last point, does that make sense? So there's two contrasts here. When it's not working, it's time consuming because you've got more maintenance involved. But when it is working, when you've got a two-sided market, there's very little to do. There's almost nothing to do. It's check in for 5, 10, 20 minutes. There is very little to do with this style of trading when the swings are there. So there's the kind of the 6 points with the farming side of it, the crop, large portfolio, active trading, and that's essentially the farming style. So does everyone are we all on the same page here? Kind of the viewpoint of farming, and we'll go through the fishing side of things in a moment. I think it makes sense in my mind, but does everyone kind of understand what I'm trying to get to here? When we've got a large portfolio, 30 plus positions, we benefit from large numbers. We've got a typically smooth equity curve. We've got when it works and when it doesn't work. And it can be and it is a really good strategy. I'm still a huge advocate of active trading. Now, let's think about the contrast. The other end of the spectrum is fishing, or you could refer to it as hunting if you want. But the fishing side of the equation is you've got smaller portfolio. You maybe have typos. You maybe have smaller portfolios, smaller positions. You've got certainly less than 10, maybe even less than 5 positions. Maybe it's just 1 position or 2 positions at a time. So that fishing is your hyper selective. Now, overall, you're going to have a universe of stocks that is significantly smaller. My universe of stocks for the farming is about 350 stocks. I'm looking to farm opportunities from that universe. Whereas fishing, you're going to have a pond. You're going to have a smaller but well-stocked pond to fish in. The equity curve is comparable. There's no such thing as which is better, which is more profitable, because they're both profitable. The equity curve is similarly smooth. It is comparable. It's less prone to the big swings in either direction because you've got less positions on. So when you have everything going in the right direction, you're going to have the big swing up in the equity curve. And conversely, if nothing's working, if you've got that one-sided markets, then you're going to have big swings in the other direction on the downswing. So fishing, it can be less prone to those big swings, but it averages out, which is the counterbalance to farming. Fishing is less activity. Obviously, there's more waiting involved. So if you're someone, which is me, I do like activity. I like having position. That suits my personality fine. However, if that's not your personality, then maybe fishing, maybe waiting for that sniper shot, stalking the fish, waiting for the nibble, waiting for the bite, and then looking for the strength. Maybe that less activity is more suitable to your personality. Now, obviously, there's more waiting between setups, and those nibbles, can turn into some explosive movements. It can be certainly less capital exposure, but then because you've got less overall capital exposed, then you can take more risk per position. You're still trading small. I'm not saying bet 10%. I'm saying you can still trade small, 1-2% of your equity. And if you want to go up to 2.5 or 4%, you can do that because you've got less capital exposure. Then you should be able to risk more per position to compensate for that. So fishing, smaller portfolio, smaller positions, you've got a smaller universe of stocks, but the quality should increase. There's obviously going to be less activity, more waiting, and some of those nibbles can turn into some huge clunkers, like that silver trade that you have got on, Adrian. You're up 300%. That's the type of trade that you would wait for on a regular basis. If you just waited for that one silver trade to give you the 300% return, then there may be several weeks, several months between those types of trades. Awesome. So that's where we're at for the moment. Now, I've got some further thoughts on this, but there's the two distinctions between what I consider fishing and farming. Now, for me personally, it's time for change. And one of the, as I've said like a few times already, I hate switching trading styles. It really grinds my axe. Consistency is not just my number one rule. It's not even a rule. It's an ethos. It's a way of trading. Consistency is the only way to see regular trading results. And I'm a big fan of trading through patches of weird market conditions. And that's why I trade small, because it allows me to trade frequently and keep that consistency, and it allows me to follow that trading plan. However, it is equally important to recognize when changes need to be made, that conditions aren't necessarily right. Now, I'm not saying to scrap the strategy, because, hey, it works, but there's ways that we can apply it. You can go from the fishing extreme to the farming extreme. So it's time for change. Now, what I want to point out as well, and preface this, that it's not a frequent thing. I've made this type of change perhaps 3 times in the last 20 years. The last time, or one of the first times, was just prior to the 2008 crash. I actually had some of my worst trading, and I was able to flip that to one of my best trading periods after or just at the start of the 2008 crash. And in an interesting twist, the market conditions that we're seeing right now, right this moment, were exactly how it was for actually several months prior to 2008 crash. So through the end of 2007, the beginning of 2008, if you go and look back at the chart, you'll see that same up a day, down a day, and if you actually look at it on the monthly chart, you'll see it's up a month, down a month, up a month, down a month. It was a horrible trading experience. So I had to make some changes back then, and I'm thinking about making these changes right now. So all I'm illustrating is it's not a frequent occurrence. The next time, the second time that I've done this was a change of markets, not a change of strategy, a change of markets. So back in 2009, 2010, it became very clear that my primary focus, because back then I was trading Forex, I had a Forex hedge fund, I had 10 million under management, blah, 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 all the rest of it. But it became clear that my focus should be away from foreign exchange as the primary vehicle to trade and move towards the stock market, because the stock market and the economy was in full recovery mode. We were making new highs back in 2010. Although you can see the 2008 low, the rally, all the rest of it, it was only when we got into 2009, 2010 that we were breaking to new highs. There was a little bit of a recovery, and then we saw explosive movements. And the third time is right now. I'm giving serious consideration to a strategy shift. Serious consideration to a strategy shift. Now, the good news is that whether we're thinking about farming or whether we're thinking about fishing, the only difference between that I'm talking about making is the main difference between farming and fishing, the main difference, as you probably already gathered from what I've already said, is frequency. The only difference between farming and fishing is frequency. We'll say that fast 3 times. Farming, fishing is frequency. So you've got this difference. So this is the difference in the farming. I'm happy to sacrifice some quality because I want the crop. I want a high yield crop. I'm going to try and fill my field full of seeds and see how much works out. And as I've already alluded to, right now, that's not a great strategy. It's not that it doesn't work. It's just that I don't think the market conditions dictate this style of trading. I don't think that these market conditions dictate. And I don't like making these decisions fast, because what I don't want to do is make a decision on a knee-jerk reaction only to have the market conditions suddenly become perfect. And that's what I'm trying to avoid. That's the consistency element that I'm trying to make. So what I'm doing, I've already started doing, and our insiders know this, and our members already know this. I'm already starting to move towards fishing. I'm just declaring it. I'm just making it official. I'm practicing what I preach. And I'm moving towards more of a fishing attitude. And again, the only difference is turning the dial on frequency. And that's it. That's all I'm saying. So turning the dial on frequency. So that's where I'm at for the moment. So what does this mean? What is this turning the dial on frequency? So if we go from the farming dial to the fishing dial, we went from one extreme to the other, then what should happen is that the quality of the trade should go up and the frequency of the trade should go down. The quality of the trade goes up and the frequency goes down. So how can we do this? So all we need to do is to turn the dial. So there's a few things that actually needs to be done, but it all revolves around this frequency. So at the moment, my universe of stocks to have the farming approach is about 350. There's lots of stocks in there that I've never traded. It's just that they meet the criteria to consider them. So although it's 350 large, not everything, there's lots of stocks in there that I've just never traded, but they meet that criteria. So I've got this universe of stocks. That's where I look for opportunities. It's where I farm, essentially. And the first thing that I need to do is to reduce that number of stocks from 350 to about 50. And I should move from open positions of 30 plus to about 5 plus. So just reducing the universe of stocks should allow me to reduce the frequency, which is the simplest thing that we can do. So this takes a little bit of time. The initial shift is, I kind of got ahead of myself there. The initial shift is, I'm trying to My apologies. I've got my notes on the other screen saying one thing, and my slides are just out of connection. Let me just jump around. So the first thing I need to do is reduce the universe of stocks, and that's going to reduce the frequency. So what I need to do is make sure that those stocks that I'm looking at are of the better quality, a better caliber, ones that, if I'm a trend trader, ones that have a historical precedent for trending. That's what I wanted to say. So that's what I need to check. So that can take a little bit of time just to figure out. It's a manual approach the way that I do it. I've got some algorithms that I can and have had coded up to help assist that, but just looking for those quality stocks. The initial shift is I also want to focus on a slightly shorter time horizon. I've previously focused and referred to this as get paid weekly. In the training, it is referred to as get paid weekly. It's also noted as small account strategies. So it's just that shorter time horizon. I could still trade the daily charts, but I can drop down to the 60-minute charts. I just want to have a shorter pay cycle. That's really what I want to do. And that's more, it's not essential. It's more to do with managing the psychology, my own personal psychology. There's lots of 1, 2, and 3 day swings at the moment. Lots of 1, 2, and 3 day swings. And because of the way that the daily chart's set up, I'm not able to capture some of those moves. So by dropping to a different time frame and shortening what I consider to be the payout cycle from 20 days and maybe average 5 to 7 days and just be at that lower end of the pay cycle, then I just want that shorter payout. Again, I'm managing the psychology of the trade more than anything. Again, it's more from my own personal thing. It's not necessarily essential or critical to some of the shifts that I'm making, but that's certainly one thing that I am doing just to put some cash in the bank. Now, the downside, that was the point. I've already mentioned this one. The downside to doing all this is that the research that's involved, I've got to go through 350 stocks and just make sure, cross the T's, dot the I's, and make sure that these stocks are reliably swinging, even in the current conditions, just so that we can kind of benefit from those 3, 4, 5 day movements. And lastly, I need to consider the best way to manage my open positions, because I've still got a crop. I've still got the farming portfolio that's still open. So I need to think of the best way of managing it. I'm currently doing that at the moment. I'm looking for an upswing or a downswing in the market, and then I can start managing one side and then the other. So if we see the market swing, that would be great. I'm still going to move more towards that selective approach that we mentioned and move towards that fishing mentality. But that's ultimately where I'm at for the moment in my own trading. Again, I like to be open and honest and transparent with everything that I'm doing as much as possible, just more to illustrate that I'm practicing what I preach. But there's two different styles of trading. Again, we've got my viewpoints on farming. This is and has been historically my preferred method, but we've got one of those situations where maybe we should be considering about being a little bit more selective and start thinking about fishing. And these are the things that I'm doing to try and move towards a more focused portfolio. It's going to be less frequency and more quality will be going into the selections that I'm making. Again, it's one of those things. I just think that the market conditions at the moment justify this shift. It's become very clear that weird things are going on. There's such a huge divide between Wall Street and Main Street, and that divide keeps getting wider. The gulf is huge. I thought that gap would narrow significantly quicker. I thought, and I backed myself into an opinion of having a bearish market. We've spoken about that previously as well. And it just doesn't look like any normality in the markets is going to happen before the US elections. And this could, so we could see this current situation, the current weirdness, the one-sided markets. We could see this last for several months, several more months even, maybe to the end of the year, certainly till after the elections. That takes us well into the end of the year. And it's just this weirdness. And I'm not seeing an end to it. Whereas, 2-3 months ago, I was thinking, maybe it's soon, maybe it's just like everyone else, just like everyone else, thinking that we were going to go into a bear market. And unusually so, strangely so, I just don't think we're going to see that this year. And I've got to put my hands up in the air and say, you know what, my opinion is wrong. I've tried trading my opinion. I've been proven wrong. The strategy, the market conditions don't justify the style. Again, it's not that the style of trading is wrong. It's just that this farming approach is not the best for the market conditions. And because I'm now thinking that we could be going into the end of the year, certainly till after the elections, where we're going to start seeing maybe a slowdown in the weirdness. Again, we'll just call it all weird. So it certainly warrants moving towards this more fishing approach, more hyper-selective, smaller portfolio, shorter payout cycles, because, hey, we're not seeing the two-sided swings in the markets. So that's where I'm at, folks. That's, I trust that this makes a little bit of sense. And you can maybe look at your own approach and maybe think about, is it the farming approach? Is it the fishing approach? Is it a hybrid? And maybe leaning towards more of a fishing approach, having a smaller number of open positions open at any one time. 3, 4, 5 positions makes sense. I would, certainly under 10 positions at a time, I would categorize that as more of a fishing approach. And, just being hyper selective and increase the quality and don't worry about the quantity of the trades. But that's all I wanted to say, folks. Thank you very much for spending a little bit of extra time with me today. I know I've gone over the hour that we usually allocate for this, but I just felt that this was an important lesson, kind of an update of where I am in my own trading, some of the shifts and changes that I'm making, because again, it's very clear that there has been a shift in market conditions, but there's no return to normality in sight. And that is the kind of the big thing that I want to take, that I'd love you to take away, that there's no obvious return to maybe what if this is the new normal? That's the other thing that I was thinking about as well. What if this is the new normal? So things that I'm doing to just to kind of back of the envelope summary. Things that I'm doing in my own trading to shift, I'll be looking at a smaller universe of stocks. I will have that in the members area. So as soon as I've finalized that list of stocks, you'll have access to it. Other things that I'm doing is having a tighter focus. I've already suggested things that I'm doing to help with both the quality check, the timing, because timing is going to be a little bit more important at the moment. I'm already seeded those, so I'll be doing some additional trainings, and I'll finally pull and this is also why there's been a delay in the quick start training, the checklists that I promised you a couple of weeks ago, because I started to make these changes at the same time. So the quick start training will also reflect the shift or the checklists in the selection process as well, and the shorter payout cycles, the get paid weekly version of these strategies. So that's where we're at for the moment, folks. I thought this was a good one. Farming versus fishing. Where are you on the spectrum? I quite enjoyed preparing this. I trust that you've enjoyed listening to it. I felt it was a good one. But with that said, if you need some extra help, there's 2 ways that I can help you. If you're at the newer end of the spectrum and you need to know your candles from your line charts, then I've got a basics program. It literally will help you go from day 1 to, oh, now I know what that means. It's just to help you prepared. It's not a strategy as such, although there is a strategy mentioned in there. It will help you with a lot of the things that we've mentioned today. And if you do need a dedicated strategy along the lines that we've spoken about today, everything that we've spoken about is in the Profits Training Program. You've got full access to the swing trading to get paid weekly, as I referred to it. We've got day trading. If you'd rather be a day trader, that comes as a bonus. So if you need dedicated end-to-end strategies, what to do, when to do it, why to do it, then we've got that there as well. And the members area looks a little like this. So you can see all the training strategies and programs that we've got there. And the quick start, the checklists, I was just talking about that. They're going to be fleshed out with the new updated materials that we've mentioned. So that's where we're at. If you would like to know if any of those are right for you, you can simply start by sending me an email if you want, phil@antivestor.com. And if you want to have a chat about it and whether what we do is right for you, then that's great. If you've already got there, then the updates will appear in the members area. But for now, thank you for your time. Farming versus fishing is the big message for the day. Thank you for your time. Thank you for your attention. Thank you for taking a moment out of your day to spend it with me. Enjoy the rest of your day and enjoy your weekend.